take a look at how the overall market fared for the day on the NSE 20, 4,955 points. Once again, a day in positive territory, up by 0.75%. And earlier I said Diamond Trust Bank rising to a record after those first quarter numbers, and also a stronger performance today coming through from Canaan Capital, gaining the most in more than 8 months today. That's all around the 20% decline that we have seen from the company. It's East Africa's largest fuel retailer, and many saying this was slightly overdone, so certainly a jump up. On the currency front, the shilling 83.8 against the dollar. It has started to tick up ever so slightly, but certainly has not depreciated by any large amount in the past few days. On that note, let's cross over to Nairobi. We've got Rufus Mwanyasi, Portfolio Manager at Canaan Capital, standing by from our studios on that end. Rufus, thanks very much for joining us today. So just looking at Diamond Trust today, the stock rising on the back of those numbers. First quarter profit there jumping 31%. But it is certainly interesting how they're pointing out that the 24% growth in their overall loan book has been offsetting the fact that you have seen interest rates come back. And that's going to be an interesting strategy to watch. I mean, to what extent banks start becoming a lot more aggressive when it comes to extending loans in order to make up for the loss when it comes to overall interest margins.
Yeah, I think perhaps that's the trend we are going to see going forward. On the basis that the first quarter was very dicey for most banks, since we are entering the year with a double-digit key lending rate of the key central bank rate, and now it's been reduced by about 20%. And just specifically for that bank, I think it's one of the most aggressive, because looking at its loan book growth for the first 3 months compared to the previous 3 months of last year, a growth of about 25% compared to to its peers that grew their loan book by about 10 to 15%. So I guess the bank is pretty aggressive. So I think going forward, that's the trend we're likely going to see as the rates continue to come down.
I mean, just looking at this bank, it's also an East African player. Uganda, Tanzania, Burundi is where they're based. Still small parts of the business. Do you think that you're going to start seeing some strong contribution to bottom line earnings coming through from these subsidiaries?
Yes, for sure. Since for that particular bank, their subsidiaries in the region contribute almost 25% to its revenue, and I think we're likely seeing more and more growth on that end. Since as of last year, we saw it increase their shareholding in some of the 2 subsidiaries in Uganda and in Tanzania. They increased their shareholding to about 55% on average. So I think going forward, we're likely to see more strong growth on that end, coming in terms of just increasing their profits, coming from those 2 subsidiaries. But again, I also like to emphasize on the fact that they've been also pretty aggressive, just increasing their branches within the country itself. That as well is going to impact positively on their bottom line.
I mean, it just looks like they've got expenses under control. If you look at the increase in overall expenses during the period, and even staff costs aren't runaway right now. But they are aggressive, as you say, relative to the other banks when it comes to extending loans. The provisioning this time around slightly lower than the previous period, 110 million shillings. Is that something you're watching with a bank like this? Does that concern you at all?
I think for any bank and in the industry, if we are seeing cost-to-income ratios below 50%, that's very good. And for Diamond Trust with a cost-to-income ratio of above 47%, it's doing much better than compared to other banks like Equity, which is about 56%, Cooperative Bank, which is about 53%, KCB Bank, which is about 63%. So when you look at the peers, it's doing much better in terms of just keeping putting a lead on their costs.
But I mean, sorry, just coming back to the provisioning issue, because the provisioning, of course, looking at the likelihood of them turning into bad debts, and looking at non-performing loans, net non-performing loans, that more than doubling this time around, 143.9 million shillings, 144 million shillings. It's more than doubled, is what I'm saying. Is that a worry, or do you think that the growth that they are getting through is more than offsetting that?
Well, Again, I would like to look at that particular aspect in view of what the industry is doing. And for Diamond Trust, particularly when you look at the gross non-performing loans compared to the total loan book, it's about 1.3%, compared to other banks that, like KCB, which has on that particular ratio, it has 8%, with Equity Bank, which is about 5%. So I think they've really done well in terms of just keeping a very good quality loan book.
Yeah. And just staying in the banking space today, because the best performing banking stock over the past 12 months has certainly been NIC Bank. And you've got James Macharia, who's now been appointed as Kenya's new health minister. So he steps away as the company's managing director. What do you make of the new appointment of Alan Dodd?
I think the appointment of Mr. Dodd has been well received since he's coming from within the company ranks itself. So I guess he's going to take the vision forward. He's well versed of how the business runs, of how the business is run. Being an insider, I don't think he's going to have much of a challenge in taking the business forward.
And just lastly, on the retail front, Chumi coming out. And when it comes to the stock, it has been steady around 2050 today, but coming out with that announcement of that rights issue, setting that at 2 billion shillings. Very aggressive if you look at them planning to list across East Africa right now. And of course, 13 more stores they want to add to their store list. I mean, what are your thoughts on the likelihood that they'll reach this target of 2 billion?
Well, I think in terms of timing, I like to say it's good timing because there's a lot of liquidity around in the marketplace. So I think in timing, I think it's the best time to come and ask for more money. But I think what the market will want to do right now is to a bit interrogate and investigate the investment plan that they're putting on the table of what it wants to really do and the kind of investment return we're likely to get on this investment plan that they plan to use to expand. Going forward, I think when you look at that particular stock, is pretty strong. When you look at all the agricultural sectors, one of the best performing stocks year to date. And I think the market is going to be, watching on that stock and eventually how the rights issue pans out.
Yeah.